If China stocks are in a bubble, as some economists say, where can investors shift their money? Well, Europe may be an option. UBS says that European earnings have entered a new bull market amidst aggressive cost-cutting, along with an unexpected and expected rebound in sales in the second half. The Swiss banks predict that European company profits will drop 25% this year before rebounding 15% next year. So how do European stocks stack up valuation-wise? Well, we crunched the numbers for you, and the data shows that European companies trading at cheaper earnings multiples compared to those in the U.S. and even in Asia ex-Japan. But they are trading at a slightly higher book value than Asian and emerging market stocks. Now, Europe is recovering more quickly than expected, so says our next guest. Willem-Mark Nabarro is head of European equities at Exane BNP Paribas, and he joins us this morning from Singapore. How are you, William? Let's talk about European stocks. Let me just ask you, a lot of people concerned about the economies, saying that even with the differentials in terms of performance, why should we invest in Europe right now?
Well, why should we invest in Europe is a very good question. Europe has got a lot of opportunities. You know, of course, that in Europe we've got not only luxury goods, but a lot of people over in Asia like, which has not been performing very well, which is normal. But something we have seen also in the past, for example, in luxury goods, what happened is after a very, very big sell-off, because people were a little bit afraid because economies were not doing very well, you had enormous bounces in the luxury goods. The same you will see in transport as well. The same you will see also in hotels, in leisure. Other things we have in Europe, effectively, which are very, very interesting, is the guys who are very, very strong in infrastructure. You will see companies like Bouygues, for example, which is not only infrastructure but also telcos. You will also see companies which are paying very, very high dividends, which are very interesting at this moment of stage, effectively with economy going forward, whereby it's a little bit more difficult to see where you have to invest. That's also why we say it might be a good idea to start investing also in sectors and in companies where you can get very, very good dividend yields.
Yeah, William, I started off this interview talking about Swiss banks' predictions, thinking that company profits will drop 25% this year and then rebound 15% next year. How did those numbers sound to you? Pretty accurate?
Well, they sound very, very interesting, to be honest with you. Effectively, what we have seen that this year, of course, numbers are coming down. In the beginning, the analysts, the consensus was way too high, and consensus is more or less in line with what we have been mentioning as well. We're looking for EPS at -30. So effectively, we see that we are more or less in line also effectively with UBS, or UBS is more or less in line with us. Next year, we will see. We do not believe there's going to be enormous growth, to be honest with you, but there is going to be some growth, and then effectively you also want to invest in the sectors and in the name which has been underperforming the market at this moment of stage, which have been underperforming the sectors as well. And then you may be looking at names like, for example, Ericsson, a very, very interesting name in the IT hardware sector. Of course, everybody is directly thinking about the joint venture with Sony Ericsson. But it's not only that. They also do transmissions, and that's effectively one of the biggest gainers in as far as we can see. And that's also why we're saying maybe Ericsson is a good idea to make an investment in for 2009, 2010.
Okay, well, we'll get into Ericsson and your individual stock picks in just a second here, William. But I just want to bring up the point in terms of what's going on in China in the last few days. We're seeing a bit of a sell-off yesterday, down 7%. If there is a sell-off, say, here in the Asia-Pac, do you think Europe might be benefiting from maybe a market rotation?
Well, that's something we have been mentioning as well. We have seen effectively the cyclicals running ahead of themselves. We think that effectively what we have been mentioning on several occasions, that cyclicals have been going too far. That's also why we have been mentioning on several occasions, the last time I was here, we mentioned it as well, that it would be a good idea to look at more defensive names and not directly the cyclicals. In the cyclicals, of course, there are some laggards where you can make some money, but it would be more interesting to look also in the more defensive names. If you look at the mutual funds, the long-only funds, most of them have not been really participating in this rally. So we will not be surprised if those guys will come back to the market, and they will be looking, of course, in the sectors which have been underperforming and which are giving real value at this moment of stage. So you come to, of course, at that moment of stage, the more defensive ones. You come to the infrastructure names. You come to the telco names. You come to the pharmaceuticals. You come to oil and gas at that moment of stage.
And William, you mentioned Ericsson. That's a telco name, I guess more tech-heavy. Would that be a defensive play?
If you look in the IT hardware sector, I think it would be one of the more, say, defensive names, because effectively, like I mentioned, of course, everybody is looking at this joint venture with Sony Ericsson. This is not the biggest money machine for them. They make more money effectively on the infrastructure, on the data. That's where they make their money. And that's also why we say effectively what we see happening in China. Of course, the infrastructure, they are building up their infrastructure as well. Ericsson is very, very present over there. Will not be surprised if Ericsson is going to be very, very present also in India, to be honest with you, and anywhere else where people will need, say, the infrastructure for data. So going forward, I think that Ericsson is a very, very good pick. If you say, well, I don't want to have too much exposure to the IT hardware sector, again, look at that moment stage at pharmaceuticals, something we mentioned as well, especially going into fall, winter. Look at what is happening in the northern hemisphere. People are very much afraid, if you look at the WHO, also very much afraid that effectively the H1N1 virus will take off.
William, let's take this sector by sector, shall we? I think we're running ahead of ourselves, William. Let's get back to our European stock picks and bring back in our guest today, William Nabarro of Exane BNP Paribas. And William, before we left off, you're talking up your pick of Sony Ericsson, well, actually Ericsson, which is part of the Sony Ericsson tie-up. Let me just ask you in terms of your outlook on the stock. On our Bloomberg system, our analysts are looking at a potential upside of maybe 11% on the stock. But how do you see Ericsson playing out for the rest of this year?
Well, for the time being, effectively, we remain very, very positive on Ericsson. There is still more upside potential on Ericsson, effectively. If we compare it to some of the other players in the sector, we believe effectively that Ericsson at this moment of stage is better managed. Also, if we look at the balance sheet of Ericsson, looks more interesting as well. And also, effectively, going forward, effectively what I mentioned before, concerning the developed world or the emerging markets, which are looking also to have more and more effectively data coming through. They need the infrastructure for that, and Ericsson is definitely the pick you want to have. This is the strongest player as far as we can see. So that's also why we remain very, very positive on Ericsson. We hope, of course, that Ericsson will surprise with the following quarters. And in that case, I don't know, but maybe our analyst is going to be a little bit more optimistic at that moment of stage as well. And give or take, maybe he's going to increase his target price. Will not be surprised if it's effectively Ericsson is going to surprise the market. That consensus is going to be more optimistic at that moment of stage as well.
Okay, William, let me talk about your other stock pick, and that's this maker of agricultural chemicals, which is the Switzerland-based Syngenta. It's been pretty busy with M&As as of late because it recently agreed to buy Monsanto's hybrid sunflower seeds business. How positive do you see this transaction? And just talk to me about upside for this stock. Again, our analysts on the system calling for 17% higher moves for the share price.
Yeah. No, Syngenta effectively is a very, very interesting stock. Syngenta has not been performing very well if we compare it to the rest of the market, to be honest with you, or the sector, let's put it this way. Syngenta is one of the more interesting ones because of actually agrochemicals. And that's also what we have been mentioning, see what is happening with the climate changes, see what is happening with the world which is developing, and we've got more and more mouths to feed as well. Meaning, effectively, the return coming from the land has to be higher and higher as well. Also, of course, we cannot always develop like we want because we have got some limits as well what we can do around the world. So that's on the limited space, of course, we have to try to get the highest return without damaging, of course, the world. Looking at Syngenta, they have got the right mix of products and strategy going forward. Also, if you look at the valuation of Syngenta compared to the rest of the sector, it's looking very, very attractive as far as we're concerned. If we also look at the management of Syngenta, of course, very, very strong management, which has been in place for quite some time. That's also why we're saying, going forward, if you wanted to invest in the chemicals, Syngenta is probably one of the best picks you can find in that sector.
Okay, well, William, we have an email coming in from a viewer from Liar, and he wants to ask you about European banks. At these levels, he wants to ask you, are they cheap, and which ones do you prefer?
Well, European banks, I think it's like most of the banks around the world, although I'm not a banking expert, have had an enormous run, of course, after the very, very big sell-off. Are they all cheap at this moment of stage? No, definitely not. We see some banks where we say, yes, there is some more value to make. Maybe they have been sold off too much, or maybe the sentiment has been too negative. Credit Suisse would be a bank where it might be very, very interesting to look at it and to put some more money into it. A bank like Natixis might be another one. Bank which that bank will definitely not disappear. We have seen, of course, that all their, toxic assets have been lifted from their balance sheet. And something else, Crédit Agricole, is also a bank very, very interesting to have a look at. Overall, the banking sector, we remain underweight, to be honest with you, for the time being. We do not think it is time to come back to the banks, but we will see after the full year what we're going to do. Maybe we're going to change our opinion at that moment of stage. But for the time being, we're not changing our opinion on the banking sector in global.
Okay, William, well, thank you so much for joining us today. William Nabarro of Exane BNP Paribas.